Good morning, traders. It is Wednesday, January the 15th. Taking a look at the charts today, let's focus on the overbought, oversold conditions and what's going on between the risk on and the risk off. Now, the overbought, oversold, you got this red hashtag on these trend analysis charts. This red hashtag is a level that if you get up to this area, the market is usually overbought for that time frame. And then we've got an oversold territory where if the market was to quickly drop down to those levels, based on previous price action, support, a bunch of different things, that is a level where the market should find support and put in a bounce and become oversold. When you get below this level, you start to get these green lines, this green shaded area. That is an oversold territory, and we talked about this back just after Christmas, where the market pulled back, got oversold, and I talked about how you usually look for over the next 1 to 3 days. You usually look for about a 1% pop in the market, and of course we saw a quick pop recovery there. And then, of course, it consolidated, and we're still in this uptrend. Now, when you get the oversold conditions down at a 20-day moving average, when they're together, 20-day moving average, even the 5-day moving average, they act as extra support. So if you hit those levels, you should get some technical bounce for a short-term trade. So let's just focus on where money is flowing and where price of these assets are compared to their overbought and oversold territories. Now, if we look at the daily chart of the SP 500, we are marching up the 5-day moving average, which is this blue line. You can see when you're in a strong trend, you'll hold the 5-day for quite a while. Eventually, you chop through it, reset, and then you can get back into this uptrend, just like we saw back over here. Big run up above the 5-day before it started to show some broadening formation. Again, we had similar price action here, where the price started to broaden and break through the 5-day. Here, the price started to broaden and break through the 5-day, and we're heading back up this 5-day moving average again. But overall, we're starting to see a bit of a sentiment shift. Now, overall, stocks are overbought on a short-term basis, but that is normal for something that is trending to the upside. Market tends to stay up in the overbought territory and just keeps riding that upper line when it is in a strong trend. You don't want to try and short something in a strong uptrend like that. Now, if we were to go over to, let's go over to bonds here. If you take a look at the chart of bonds, bonds are more or less over here. They were red bars, meaning it was still in a downtrend. This red shaded area means this overbought territory was down over here, and the market pushed up through the overbought territory, continued to muscle its way up, and this means it's overbought. And more or less, when you're in a downtrend, that is a kind of a shorting opportunity. You should expect a quick pullback when it gets overbought. But what the key is here is we're seeing bonds are overbought just like stocks, meaning money has been flowing into bonds just as much so, more or less, in the last few sessions as the stock market in terms of previous price action, resistance highs. So money is moving into bonds as well. We're seeing that flow into the safe haven. And if we zoom out on the bond chart, we've talked about this many times, that we got this falling down trend line, which price is starting to threaten. It's tagged it, pierced through it, and sold back down. Yesterday was the first kind of real close above it, and we also had green bars start to form, meaning we're starting to get into an uptrend. The momentum has gone from a downtrend and shifted towards an uptrend. Now, if we take a look at another safe haven sector, which are utilities, we talked about this yesterday. You can see yesterday into the close, a bunch of money piled into utilities, really pushed higher to test the highs. And we've dipped down into these oversold territories. You can see when the market gets oversold, you'll usually see value hunters kind of step in for some type of short-term bounce. Sometimes it can be a significant bounce. This was a little double bottom formation, and we've seen it go up and test these highs. And look at the big price action. It's had a big A, B, C correction. It's working its way back up. It's on the verge of breaking out and starting to extend to go higher. And usually we see utilities act a little bit as a safe haven because no matter what happens in the world, people are still going to need utilities to survive. So they will continue to thrive and do well. And that's why money starts to rotate to utilities when they start to worry. So money into bonds, people are worrying. Money into utilities, people are worrying. And if we go over to precious metals, obviously there's been a pullback, which is totally normal after the size of the run that we've seen. But you can see gold has flagged down in the last little while. It got oversold yesterday, and it's at the point where it's looking primed and ready for, this is a beautiful bull flag. If we actually just squish this chart out a bit here, you can see this big run up, and then we got this big bull flag. It's starting to get oversold, and this is the point where hopefully we're going to start to see it really take off and move higher. And the fact that stocks are overbought, everybody's starting to move into the safe havens, and gold and silver and miners. Let's go to silver as well. Silver, the same thing. We've had a big run up. It's dipped into these oversold territories. It's oversold at the 20-day. They are all at support, and gold seems like, or the precious metal sector seems like it's that kind of the one ready to potentially pop and start to run to test the recent highs or go higher. And if we take a look at the chart of gold miner juniors, they were oversold. They move a lot more percentage-wise, which is why it's a little sometimes easier for it to get oversold. Overall, started to give us an early warning sign that it's potentially starting to change trend. It had a very strong recovery yesterday. What was interesting was the previous session where it's a gap lower, sold off and closed down near the low. That was 2 days ago, and the amount of fear in the precious metals sector, the chat, the talk about traders who are into the precious metals really heavy, they were all panicking out of positions. It was pretty widespread, and I mentioned this in yesterday's video saying, you know, that is usually the sign that when everybody starts to just give up on metals and get out of their trades, that's usually when we see the market do a knee-jerk reaction. And if you look at the daily chart here, here it is. Here's the flush out down into support. We had a gap here. This gap got filled. And then yesterday, the market rips to the upside, negates that whole panic-induced move to the downside. Now, the volatility may not still be over. A lot of times these lows, we see big volatility, huge wide price action, but this was we had a pattern in here that unwound, and then we had a little hiccup, and then we had this flush out, and this was kind of a signature type of low, or which is why I mentioned it yesterday, is everyone is freaking out who's holding metals, and they can't take the pressure. A lot of people got in right up near the highs. I think we got in somewhere up here. We know the market can have a fairly decent correction with miners. That's why we have a small position. We can take a 5, 6, 7, even much larger swing, and it doesn't do a whole lot of damage to our account because we know this can swing 5, 10%, very easy to the downside, but we also know it can rally 30, 40, 50% to the upside. And this is where people just can't take the heat. That day was the day where people just hit their threshold and they started to panic and give up on trading metals for a while. So that's kind of where we stand in terms of the risk on, risk off asset. It seems like there's a shift towards the risk on going forward. Today, tomorrow, I think could be a pretty significant day in terms of where that momentum is going. Hopefully we see a big up day in metals. I think the stock market is on the verge of rolling over. We may shift into bonds, which are going to be similar to a precious metals type of trade. They're another type of risk off asset. And I think we've been scaling out of the SP 500 because we're getting up to these levels, and all these signs are starting to show that there's oversold precious metals market. Bonds are starting to move up, and equities are a little long in the teeth, and we could expect a pullback at any time. Now let's just jump over to energies real quick. Natural gas still showing big volatility. It is big down day today, down 2.5%. It's trying to break through this 20-day moving average. Let's just zoom in a little bit here. You can see we've poked through it 3 times, got rejected yesterday, and today we're continuing to sell down. Overall, we talked about this. If we get down to this level, it could be a really significant pivot low in the market. This low that we saw over here, I think this flush down could be really significant to stick a toe in the water for a knee-jerk reaction back up to the 20-day. Potentially it could be the start of something bigger. More or less, we need to see a breakthrough in the market like here through the 20-day, through the 20-day. We need to see something through the 20-day eventually, probably over here, and then I think we're primed and ready for one of these big oversold bounces in rallies in the market. But if you look at the trend analysis, we're still red. You can see how it bounced up to the 20-day moving average. We got red shaded bars here, meaning it's overbought, and then sellers step back in, drive it down. Now, these overbought territories are very short term, as you can see. Overbought one day, sold off, they've moved the next day. Overbought yesterday. By the end of the day, it came all the way back down to this 5-day moving average. The 5-day is usually a very critical support zone. So that's where we are now. So now natural gas is, as of yesterday's close, is right in the middle. It's at the 5-day, but it's the same distance from overbought to oversold. So it is neutral. This morning is trading at 2131. 2131. It is trading right down here. So it is going to be actually close to this oversold territory right down here. It's actually going to be right down into deep into this support zone. So natural gas could very much so find support today, bounce later today or tomorrow. But if you look at this price action, you've got a strong move down, little tiny consolidation. That's a bear flag. The second half of the move measured is down here. All this kind of plays out. It went from an overbought, formed a bear flag. Today it's going to gap down into support with a nice measured move and near the oversold. So we'll probably see it hold today or tomorrow and maybe have some type of bounce, but the momentum is still to the downside. You got to be aware this is being rejected, and I'm more enticed to wait. Either we get a very extreme low and stick a toe in the water for small position, potentially add later, or we get in later at a higher price once it's shown price action that's firmed up and primed and ready for an imminent rally. Looking over at crude, it is flat on the session. Overall, it is testing the 200-day still. It's holding its ground. The 5-day moving average is moving down. So if this is a high momentum move, we could very easily see it start to move today or tomorrow because the 5-day is going to continue to push it down. Very similar to natural gas in terms of it's had a quick drop. It has it's consolidating here at the 20-day. It's getting squished by this 5-day. This could very easily extend and pick up speed down to this lower level here, which obviously is a fairly key support level on the chart. So overall, the trend, if you look at the trend analysis, it went from oversold, started to shift its trend. Now technically it is in a downtrend, and it's kind of holding its ground. You could argue here on the intraday chart, it's got a little bear flag, and this could continue to work itself lower. But again, this was a huge move. This was about a 10% swing from pre-market to closing price low on the day, and it continues to swing down. I'm not a huge fan of jumping onto trades that have fallen more or less 15 or so or more percent without really any kind of significant pause. These are short little pauses. This very much so could be a high momentum move, but overall we'll see how things reject and if they hold through the 5-day or get a bounce here, but I'm not sure if we're going to get involved in the crude oil play at this point. Anyways, that's it for this morning. I think the video could be a little longer than normal, but hopefully you got some good info out of this, and we'll talk to you soon. Bye-bye.